You're watching Famous Dave on YouTube.
All right. I'm not quite sure where that came from, but I think I ordered it on Fiverr at some point in the past. Welcome back to the channel. Due to the fact that UVXY is kind of down in the gutter and there's not a whole lot that I'm interested in doing in that issue, I've been looking around and I found BYND, which sort of interested me coming into earnings. Now, earnings for BYND is on Monday afternoon, that being one session from now. This is a Friday, and I've put a little position on. This is an issue that we've traded before on this show, and currently the stock has been leaking lower. So if we look at the chart here, we can see just a precipitous down move. Now, I remember way back when I was short this a few months ago, dreaming of the day that this would break 100. And it did happen. I wasn't short the whole way down. In fact, I haven't traded this in months. But some of these option prices caught my eye. I was looking at this yesterday, and with a week to go, it had these 50 puts, which is like down 50%. Somebody was paying around 50 cents for them, and I was like, wow, that's some rich premium. 50 cents is $50, and somebody paying $50 for an option in a $100 stock that's $50 out of the money with only a week to go seemed rich to me. So that caught my eye. I started looking at stuff. I started doing stuff, and I ended up with this little position here, which is essentially a short strangle coming into earnings. If you look to the right top of my screen over here, you can see it says for the options a week out that there's a expected move of $19. So this thing is right around 100. It's supposed to move around $19 on this earnings announcement. And so the idea is to sell some strangles that are either right around or a little bit outside of that $19 move, and either take them off right before earnings, trade around them, or let them ride for earnings. So I kind of wish I had recorded my actual trades as I traded them, but I didn't do that yesterday. But you can see my position here now. And if we go to the Analyze tab, we can kind of dig in a little bit to the position a little bit more. So let's do that. All right, let me get out of the way here too. And I'm going to actually kind of blow up the screen here so you can see it a little bit better. All right, so in the middle of the screen here, you can see price slices. We're in Thinkorswim. We're under the Analyze tab for BYND. Now, the top of the screen are the options market. On the left are calls, on the right are puts. But we're looking in the middle of the screen here, and you can see it says price slices. Then it shows 3 stock prices. And just to the right of that, it says up 10%, 0, and down 10%, which is kind of self-explanatory, but the center price is the price the stock is right now. And if we move farther to the right, we can see our Greeks. So delta is the can be defined in 3 or more different ways, but it's basically the stock equivalent. So our position is the equivalent of as if we own 10 shares of stock right here. So goes up $1, we make $10, goes down $1, we lose $10. Sounds pretty tame, right? And it is relatively tame. However, if you look up 10%, all of a sudden we're short 46 deltas. So it gets less tame as we move away. And when we look down 10%, all of a sudden we're long 42 deltas. So this is what happens when you're short options, as you don't want the stock to move, and as the stock moves, your deltas start to go in the wrong direction for you. Moving further across here, gamma is going to be a representation of the curvature of your position. Short 5 gamma, what that means is that's going to tell you that this delta here is going to move by -5 as we move up. So up a buck, instead of being long 9 deltas, we're going to be only long 9 minus 5 is 4 deltas, etc., etc. Moving over to the next category of theta. Theta, this is the time premium, or the amount that your position is going to decay, or how much you're going to collect per day in decay for your position. So it shows $189. So what that means is that every day this position is going to be worth $180 less, or since we're short it, we're going to collect $189 or now $190 per day. Now, typically with the earnings situation, this money doesn't come in every day. It's not like your account, they're like, all right, depositing in Dave's account, 189, it's the end of the day. Usually it doesn't work like that, but over time, it's gonna this is gonna be correct. And essentially, usually what happens is earnings are gonna come out Monday after the close, and then the stock will make a move, and then all of this, any of this theta from the last couple of days will all come in at the same moment. All right, so Vega is the amount of money you would make or lose for a 1 point move in volatility. We're short Vega, we're short options, we're short Vega. We're not short a lot of Vega because the options we sold are only a week out. If these were farther out, we'd be short a lot more Vega. Short 21 Vega, obviously volatility is going to come in after earnings. Where it will come into, I'm not sure, but just to give a rough guess, right now it's showing volatility 164. I would say it probably comes into maybe 70 or 60 after earnings. And all these Greeks are kind of tied to each other. The theta and the Vega are definitely tied to each other to a large extent. But, a better way of kind of estimating how much you could potentially make on the position would be to just figure out what you sold this stuff for and add that all up. So I sold this put for $4, that's $400. I sold this one for $275, that's $675, and so on and so forth. If you add all that stuff up, it's going to give you a good idea of how much you could potentially make if the position kind of stays where it is. Once again, for this short strangle position, if we'll make the most money if this stays between 85 and 117 after earnings. And pretty much right after earnings that next day, all these prices are going to come way in. These options don't expire for another week till the end of the week, but a lot of the action is going to occur instantaneously, probably when the market is closed after earnings come out. And so there's nothing for you to do while the market is closed. You're kind of at the mercy of where it ends up. And so that's kind of the risk we incur here. And we're not necessarily going to leave this position on coming into earnings. All right, and then so as we move across here, then we've got P&L open. That's going to show us how much our position has made or lost since we put it on. Right now it shows positive $90, and then P&L day, how much we've made or lost today on the position, showing negative $52. This next important column here is BP effect, which stands for buying power effect. And you can see the numbers for move up or down are all higher than here. And that is due to the fact that that's basically, once again, a principle of the strangle, in that we are away from both the strikes that we're short right now, but a move in either direction will bring us closer to the strikes, to some strike that we're short, and thus we would require more capital to carry this position if it does make the move up or down. And this number is concerning to us because the account doesn't have $10,000 even. Now this number is going to be inclusive of however much you sold the options for. So if you sold $5,000 worth of options, if your account has $7,000 in it, and you could add $5,000 to that $7,000 to get $12,000. In this case, we have sold a total of, I think, somewhere around $1,400 worth of options. So so we're right on the edge of having enough money right now, but if it moves up or down 10%, we're not going to have enough money to cover our account, and we're going to get some sort of a call. So kind of position's probably a little bit too big for the account right now, and we should probably look to pare it down in one way or another before the earnings come out Monday afternoon, certainly. If we do look at, if I do shrink the display or just show you the P&L section here, it does show us having positive buying power by $200. And it shows our balance at 7,100 right now. But those numbers are pretty tight here under buying power. Now, if we click on buying power, it's going to give us this other information here, which is pretty interesting. Let me show you this too. Now, this is going to show you how much each individual option trade that you have on is affecting your buying power. And we can see it's broken it down into, well, one strangle, the 85-117 strangle, is costing us 3,000 in buying power. The the 117.80 strangle is costing us 2,000, and so on and so forth. This PNR number is very important to look at. Point of no return. I haven't seen this sort of put this particular way anywhere but Thinkorswim, but this basically is saying to us that if this moves down more than 51%, like a gap down of more than 51%, our account's going to go to zero. Okay, so that's very important information to have. I feel comfortable with that at the moment because I don't see it as realistic that this is going to gap down 50% on earnings. And I could list multiple reasons for that, but I'm not going to get into that here. And then again, to the upside, moves up more than 60%, the account is wiped out. That's risk, right? That's real risk. You want to keep this in mind. You may have personal parameters where you don't find that acceptable, that this is too much risk for you. And that is understandable. But this is at least describing the risk you have on right now. So definitely important stuff to check out to, when we want to manage our risk, we got to know what the risk is first of all, and we want to quantify that. So there you go. Once again, this is down 264 on the day. It did rally up a little bit yesterday. And once again, the position's made $100 so far. So another way of looking at this position, once again, is that we are risking a account that has $7,000 in it to make however much we sold these options for, which I'm calculating to be about $1,400. So we're risking $7,000 to make $1,400. We could actually lose more than $7,000 if this just gaps down or up. And so that's all stuff to consider. The fun kind of cool part is that you can watch what happens, and I'll give you an update both Monday before the earnings come out and Tuesday after earnings come out, and you can see what happens. Now, a number of things could conceivably happen. I could pare back the position so it doesn't really have any risk on earnings. It could be taken off. A bunch of things could happen. But in the meantime, check out what happens. We'll see if I make money or lose money on this. If you have any questions, please post them. Thank you so much I want to thank my Patreon supporters. You guys don't get enough credit. I know you hear this in every YouTube video, people thanking the Patreon supporters, but I'm going to do it here. I am working on a special gift that I'm going to be sending to you from the channel that just at some point, everybody who's a Patreon subscriber is going to get it. And I've been working on it, and I think it's really cool because I just want to thank you guys for your support. Patreon doesn't my particular Patreon account doesn't generate a whole lot of funds, but it's just I'm very grateful for the support of people supporting the channel. It's like an independent channel, and I put a lot of time and effort into it. So I'm grateful when people appreciate that. All right, so what else do I want to talk about? Well, I am still along this SCIF fund. This is a Indian small cap ETF, and my feeling is that the Indian stock market's been beaten up pretty good. They've got their banking situation more under control now, and there's a ton of potential there. So this is kind of a reversion of the mean to the mean play, which is, stock market mumbo jumbo for it went down too much probably, and it's probably going to come back a little bit. This has gone from 70s, like 74 something, or 72, all the way down to 29, and we're thinking that maybe it's on the way back up now. So I did purchase some of this one. Maybe you can check it out, see if it's something you're interested in. Of course, everybody's situation is different. I have no idea what your financial situation is, so I couldn't, I can't legally recommend anything to anybody, but B, I wouldn't want to just blanket recommend people do stuff, because you never know what their situation is, what their risk tolerance is, all that sort of thing. So we are coming to the off season for me. On a personal note, I live in a resort area, and we are coming to the off season, which is good news because I'm going to have a lot more time to spend on the YouTube channel. I do want to invest in hiring the cameraman a little bit more. So if you do, I'd appreciate your support. Please consider signing up for Patreon and giving like $1, $5, $20 a month. It's going to go towards a cameraman, so we can come out from the studio and do some cool stuff outside the studio. I would like to actually go to some of these VIX conferences and stuff, but I really can't afford to do that right now until the channel grows a little bit. So help the channel grow, tell a friend, check it out, and all that good stuff. UVXY kind of just in the doghouse right now, breaking new all-time lows every day. It certainly can go lower. I mean, the VIX is 13. It could definitely get back to like 11 or 10. But in the meantime, it's hard to really lay into a short, at least for me, because I know as soon as I get really short this thing, it's going to spike. So maybe I should like take one for the team. Maybe I should just be like, all right, guys, here we go. I'm going to get really short it and just sell a bunch of stuff, and then everybody else can get long it and it will spike. Because I know as soon as I lay into a big short here, it's going to spike. So I'll let you know if I decide to do that so that you can get long it and make money. But in the meantime, I'm not that interested in putting a big position on UVXY. I'm not a good market timer at all, and for me to kind of like make a judgment and say, okay, now's the time to stay short this or not, I know I'm going to mess it up. I feel much more comfortable hanging out until there's a spike and then jumping on board when it's spiking than just staying short it right here, because I know as soon as I lay into a short, it will pop, and that's just the way it is. So that's why I'm kind of looking for other opportunities at the moment instead of UVXY. There's been a bunch of articles coming out talking about how kind of the short vol trade isn't that great, but we've had a great move. In the last month, we've gone from like 31 and to 20. I mean, what more can you ask for? That's like a big down move in UVXY, and we're taking out all-time lows all the time. And, if we keep doing this thing could split potentially. Probably not by the end of the year, but potentially in the first quarter of next year, this thing could split. So we'll see what happens moving ahead, but I don't feel comfortable being short UVXY in any quantity right here. I wouldn't be opposed to doing the bullseye trade and having that a couple calls, at the money calls short, and rolling them every week. I was doing that for a little while, and that certainly has worked. It's certainly worked being short volatility, but the time will come when we do get a spike, because it always does. If we look at the VIX here real quick, we can see, you know, we're on the down again. There's gonna be a pop at some point. I don't know when it is, but it's gonna come, and when it does come, I don't want to be like laid into a mega short at the all-time low, because I'm just going to be kicking myself saying, what were you thinking? So I'm maybe leaving some money on the table, not being short it right here, but at least if it spikes, I won't be like, well, obviously, why would you want to? I mean, look at this chart here for the VIX. If you sell it right here and then it spikes, you're going to be like, well, I was an idiot. Why did I sell it right here? It's like the lowest it's been in a while. And I was just asking for trouble. And I kind of feel like it's asking for trouble to, you know, if you've been shorted the whole way down and you're just hanging out, then I understand that. But to initiate a short with the VIX down here, I mean, this thing is decaying, certainly. 7% contango is great. It's going to continue to decay. However, the VIX itself could erase all that decay stuff real quick just by popping back to 20. So, note of caution to you VIX traders out there. All right, well, there you go. Thanks for watching. See you soon. Bye.
You're watching Famous Dave.